Okay, I am back. We're going to go through the stock market technical analysis, looking at various charts, indices, trade ideas. If you're new to the channel, that's what we cover here is trade ideas, looking for opportunities. I did do a live stream yesterday, kind of just last minute. I decided to do one, so if you want to go back and check that out, we covered lots of different stocks and everything. And for the most part, today's going to be, kind of a repeat of what that live stream went through. Okay, so we're going to start out with the triple Qs. Couple things I see on the triple Qs. We do have on the hourly chart, we had this bearish rising wedge, and we overshot it just briefly, and we've now come back below it. We could be bear flagging with a little bit more downside to go, and basically the way I see it is, we had this breakdown, you're kind of bear flagging, and then you get the continuation. The projected target for this move, if this is going to play out to be a bear flag, is really right about there, 382.81. And that's where the buyers are likely going to step in and buy this thing. So we could be headed lower in the short term down to that level of support. That's really all I see. I don't see anything too much different. On the PPO down here, we did overshoot just barely to the upside and burn through that negative divergence. On the Qs, on the RSI, we still have that negative divergence. So you'll see here, I have it circled, made an equal high, but a higher high in price. So negative divergence still there on the Qs. Maybe we want to pull down to that support level. So that's a target, potential target. Same thing with the SPY. You can see continuation of the negative divergence right there. See how we're just over, basically making a kind of an equal high, or it's slightly lower high on the momentum. See right there, slightly lower than before. Same with the RSI and higher high in price. So negative divergence is there, and basically the way that the SPYs acted really all of 2021 is make a new high, get a correction, make a new high, get a correction. So it's basically sell, when you make a new high, you short or sell the rip, and then as you pull back to some support, you buy the dip. And that's, the bigger trend has been up obviously, but that's really been the status quo. So maybe we are bear flagging. We're going to pull down nearest, the support that I see nearest support is 454. Yeah, it's about 454 as the nearest target. Besides that, I don't see anything different. I don't see anything that's out of the norm or crazy. Let's look at the small caps. So small caps started to break out to the upside. We've been going sideways here on the IWM pretty much almost all of 2021. We broke to the upside right here, but this breakout is a divergent high. So you'll see here on the PPO how we made a new higher high in price, but on less momentum on the PPO and the RSI. So I think there's a high probability that this breakout's going to fail right here. I think we're going to fail and head down to the bottom of the range. Something to look for. There's no sell signal, no reason to actually short this thing. But if you see the failure where we start to break back into this range, that would be your signal, your sell signal for a trade down to the bottom of the range. All right. So that's all I see as a potential kind of a setup, but no actionable trade yet. So we'll keep an eye on this one. Okay, gold. Gold continues to move higher. I've been talking about how I thought we were in a buy zone when there was a buying opportunity in gold. Back here when we were hitting these major supports down at 1690, we hit it again here at 1720. So again, this has been support for us. And let me kind of clean this up a little bit. But there's your major trendline support, this red line right here. And I've got it circled every tag of support there. We tagged it again right there, and we tagged it again right there. That's your bull market in gold. That's, you buy at major support. When you're in a bull market, you buy at trendline support, and that has been your buying opportunity. Same with the miners. So gold off of that last tag of trendline support is up over 8%. And again, we also, on this recent dip right here, this was an impulsive plunge that happened on a Sunday night in the overnight session. And basically they bought that up pretty strong. But that last dip was a divergent low. So you'll see the momentum indicator. Here's the PPO. So we dipped down, made an equal low as before right here. And yet we made a higher low in momentum right there. Same on the RSI. So that was an indication that, okay, we were likely putting in a bottoming pattern. This was likely just a flush out move where they're just, trying to shake people out. And sure enough, that was the most objective buying opportunity that we've seen. So oftentimes when you wake up to big gap downs and big flush out moves, it's oftentimes the best time to buy. Not always, but in this case, the chart was set up bullish. And as far as I can tell, we've started to continue the uptrend. We were done with the correction that we started back here in August 2020. There's your big corrective price action. We've started to kind of base out and put in higher lows. We need to see a higher high now. We do have a higher high from right here. You can see 1, 2, 3 tags of that 1832 area, and we've now put in a higher high. So I'd look for that to hold. That 1830 really should hold as support, maybe a quick little flush through it, but I would look for the buyers to step in there. And ultimately, we start to break above this level, 1917 as the high, but it's really right about that 1910 area. We start to break above there, and it will be obvious to all that we're putting in new higher highs and continuing the uptrend in gold. Of course, by the time we put in the new higher highs, that's probably about the time you're going to get a pullback, but I still think pullbacks should be bought. We buying the dips, adding to a position on support, in my opinion. Okay, so the miners look good as well. Here's GDX. Again, GDX, all these zones right here, and I kept circling it, look like key areas to buy. And if you bought at support there, you're up already almost 20% on that one. We had a bullish falling wedge. I talked about that. Clear breakout of the wedge. There's your breakout. Came in for a back test. The buyer stepped in early, and off she goes. So making higher highs and higher lows. To me, it looks like we've likely started the uptrend, and we're likely going to go, make new higher highs, new all-time highs in this GDX here in the near future. Something interesting I haven't pointed out, but the dollar is also rallying. The dollar's been rallying with gold, and it just shows the underlying strength in gold. Gold is priced in dollars, so oftentimes they move inverse to each other. Gold will rally while the dollar falls and vice versa, but we're actually seeing the opposite. So the dollar's rising while gold is rising. One of these needs to likely mean revert, and I'm not exactly sure which one, but the dollar does continue to rise. However, the dollar's rally that we're seeing is we can extend this out. We're at resistance right here. You can see that we're at this key resistance level, and we have negative divergence right there. So you'll see the RSI and the PPO, we're making new higher highs in the dollar, and yet the momentum is clearly trending down. And then we're just continuing that downtrend, making lower highs and lower lows in the two momentum indicators that I follow. Again, if you guys aren't familiar with how to track these or how to use these, take my stock market technical analysis course, link in the description below. I go through all this in detail. It's about a 4 to 5 hour training course, and I priced it at $99, so it's affordable to all. And so, yeah, we're at resistance with negative divergence. I think it's likely we're going to, this is the end of the rally for the dollar. We could pop it. Maybe we'll see a short intraday pop or something like that and then roll over. You always want to leave an opportunity for a stop rate to happen, but we are at resistance. So that's probably the end of the run for the dollar or close. Something I want to point out here, XLY. This is your consumer discretionary index and or sector analysis, and this is we're looking here at a daily chart, but this is your 2009 lows. You can see as I zoom up, I've got this line marked out where basically we held support. We started to put in a trend. We held support several times here, and then once we broke that support, it's been resistance ever since. There's resistance, and as I zoom in, you can see kind of where we're at today. Resistance here, right there. They popped it, just barely popped back above there, and we're right there at support. So if we fail, if this trend line, if we get some sort of a breakdown soon, an impulsive breakdown, look for a big breakdown, big red candle, then likely that was your blow off top, ran a bunch of stops, and then, down we go. So something to watch for. It's, it's just a setup, but it definitely we're definitely at that area where we could fail, and it could prove to be a bull trap. Looking at the RSI and the PPO, the momentum indicators, you can see we've just been building this big, long negative divergence for quite some time right there on the PPO, and same with the RSI. So equal peaks in momentum. This one's slightly lower, not by much, but slightly, and much higher highs in price. Price has continued to diverge from momentum. Again, divergence is not a reason to short, so it's not a reason to go long or anything. It's just a mere indication that the conditions are right for a trend reversal. There has not been a trend reversal. We have not seen a sell signal, and so no real reason to short this thing until we see a breakdown here. And so again, if you see that big red breakdown candle or sell signal, that's likely going to be a near-term top, at least in XLY. And as always, we watch the FANG stocks because they're the big heavyweights in the market. Amazon at resistance right there at 3555, 3,555. You can see that's an area that we've basically, we popped above it just once, but every other time it's been resistance. So we're right there. Should get rejected here, head lower. Google continues to uptrend. There's no, we are building negative divergence. It continues to build, but we are uptrending. So until you see that breakdown candle, no sell signal, likely going to continue to uptrend until you see that. Microsoft, this one, I've got this bigger trend line down here in blue, and we're just continuing to kind of ramp higher. I don't see anything really indicating that we're going lower. And Apple at resistance right here at 151.30. You can see we're right there, just popped above it today, but still below it. It's been rejected, so we're still holding below at that resistance. I think Apple's likely going to get rejected here and head down to this lower trend line around 138.86. That's major support. You can see right here, 1, 2, 3, 4, 5, 6 reactions down there at that trend line. So look for the buyers to be down there. And that's where it looks like this is going. Clear negative divergence on Apple. You can see it right there. Right there. See that? See how the momentum's just going down, and yet price right up in this area was still going higher. That's your negative divergence. That's telling you you're likely going to continue down. So I think we, move down, counter trend bounce, continue the downtrend at least down to this support line here. And that's falling at about 138.75. It depends on when we get down there, of course. That's all I got, guys. Leave me a thumbs up on your way out. I do appreciate that, and I will catch you guys on the next one.